Well, we're still discussing the MPC. Now we're going to the commodities space now, and then we have joining us from the UK, Dr. Adesola Sumoni, Senior Analyst, Financial Derivatives Company. Thank you so much, Dr. Adesola, for your time. So, of course, you know the decision. Mr. Nofo here believes that the MPC should hold. What do you think they should do for the good of the economy, which is at this fragile state?
Thank you for that question. And let me start by saying this is a very important meeting. It's the first meeting under this President Bola Ahmed Tinubu. It's also the first meeting since Governor Emefiele was suspended. And at this meeting, there's a lot of focus on the committee. There's a lot of pressure on the committee to want to address issues such as the FX policy, for example, the unification of the FX policy, as well as there's a lot of investor stakeholders are also watching to see how the committee aims to address the issue of our FX shortages, as well as the price stability mandate of the central bank. There's also an issue of independence and credibility, right? The last administration and the previous CBN governor was known to align with the policy of the president. So if the president says, it wants to do something for agriculture, the central bank governor was going to make it happen. But now there's now the issue of the independence and the credibility of the central bank. But going to your question, right? Because it's such an important thing, there are so many factors on the table. The reactions are mixed, right? If you ask, like the previous speaker said, they expect them to hold. We at Financial Derivatives, we expect a 50 basis points increase in benchmark interest rates for a lot of reasons. One, if you look at inflation currently at 22.8% is flirting with an 18-year high. We also have a system awash with liquidity. If you look at money supply, last month in June, it was up 36%, I think, year on year, and about 15% month on month. And if you look at it in absolute values, it was up around 9 trillion naira to 65 trillion naira. If you look at the money in the banking system, that one was also up, I think, around 84% to 584 billion naira, the average for June. And the interbank interest rate, which is the OBB and the ON, was down to around 9%. So the system is awash with liquidity. So I think at this point, if for nothing, just to signal that the central bank still has price stability as its core mandate, I think, and the financial derivatives, we forecast with the 70% probability that the Monetary Policy Committee would increase benchmark interest rates by 50 basis points. With a 30% probability, we expect the Monetary Policy Committee to hold all monetary policy parameters unchanged.
You don't think that the president's pronouncement that he wants a single-digit interest rate will influence their decision?
Benchmark interest rate is around 18.5% at the moment. It's not going to go to single digits this year, or even anytime next year, right? And this is again what I said about the independence. The current acting governor, Fola Shonubi, I think is in a very tight spot. On one hand, he wants to, display portray confidence to investors, foreign investors, domestic investors, but also independence, right? Like to pursue the core mandate of the central bank. On the other hand, he may want to keep to make his job permanent and align with the president to kind of start easing benchmark interest rates now. But if you look at the economics of it, I don't think this is the time to start easing benchmark interest rates at all.
Right. So how does this ease into the commodity space?
I think the effect of this is not going to be direct. It's going to be indirect effect on the commodity space. If you look at now commodities, if you look at all commodities that we track, all of them, apart from beans, are trending upwards. If you look at perishables, for example, we are seeing the price of tomatoes, price of peppers up both 64% for tomatoes, and peppers up almost 200% to 90,000 and 65,000 naira month on month. If you look at non-perishables like beans and gari, they're also up quite significantly. And if you look at import elastic commodities, those ones are also up. So already prices are up, and we know the factors responsible for them. One is the removal of fuel subsidy, and another one is the unification of the exchange rate. And third, we have also the tomato Ebola, which is kind of affecting the harvest of tomatoes and as well as peppers, which is pushing the price upwards. I must add that at this point now, it is imperative for the central bank to look at the whole range of tools available at its disposal, because since May 2022, the Central Bank, the Monetary Policy Committee, has increased benchmark interest rates cumulatively by 700 basis points. And in the same period, headline inflation has declined by only 0.13%. That suggests something, right? It tells us that maybe the conventional monetary policy tools are blunt instruments to target inflation, and the key drivers of inflation are not monetary factors, but other structural and non-monetary factors. So there's the need for other tools to be deployed at this time.
Which was why Mr. Onofo talked about them holding rates instead of just increasing, as you have noted. How impactful has it been, and talking about the structural and even the impact of the intervention of the central bank, which we know has got a huge amount of money. When you put it side by side with what we would term the benefit of it, there's so many questions that are still left unanswered.
Indeed, I think what we needed, instead of ad hoc policy announcements, we needed reforms, right? Reforms takes into account the policy changes as well as the intended and unintended benefits and addresses them. For example, social protection. Removing the fuel subsidy obviously would mean that the pump price of petrol would go through the roof, and we've seen that. Also, unification of the FX market would also mean that import costs would increase, given also that Nigeria is a very import-dependent country. What we expected to see was some form of social protection, or what you call palliatives, to kind of ameliorate or cushion the effect of these changes. Overall, we believe, and even the markets positively welcome, the unification of the FX rate as well as the removal of fuel subsidy. But on the other hand, what we need to go together with that was some form of social protection policies like cash transfers, for example, discounted transportation, for example, just to kind of cushion the effect. And somebody, I don't know who said it on the show, said that what we are having now is a cost of living crisis, and it's even pushing more people into poverty. Now, if you now take all of this in addition to what is happening in Ukraine, right, where we are seeing Russia further, we are seeing the tensions escalate. We are seeing Russia attack export infrastructure, particularly for grains. I think that has big implications for the global economy, and it even raises further the need for social protection to kind of cushion the effects of both these domestic and global shocks on the average Nigerian.
All right, thank you so much. The call for social protection as palliative again, which is what the TUC also talked about. Dr. Adesola Somoni, senior analyst with financial derivatives company, joining us from the United Kingdom. Thank you for your time and enjoy the rest of your day.
Thank you for having me.